Hey everybody, welcome back. It is Mike Brown here with Remax in Toronto. Clean shaven, fresh haircut, all ready for the fall market. Well, the summer just blew past. They go faster and faster as the years go by.
We apparently entered a space-time continuum.
And as predicted on this channel a couple months ago, we were going to see a drawdown in inventory as we normally do through the end of the summer. And because I'm a numbers guy, we're going to spend this episode talking a little bit about how much those inventory numbers have fallen through the 5 regions and how they compare to the same time last year at this time. As the thumbnail says, buy long and prosper.
Available as Vulcanaires.
I'm not signaling this is the bottom of the market, and as I say sort of continually on this channel, it's very difficult to catch the bottom or perhaps sell at the very top, but you want to be on the right side of wrong, so to speak. And I do expect that the inventory is going to climb again through the next couple of months, and I think if you need a roof over your head, you have a sincere interest to become a homeowner, and maybe a little bit more caution when it comes to the condo market, but now is probably a very good time to be out there looking for a home. Now, conversely, because the inventory numbers have come down, I said a couple months ago, if you were looking for an exit strategy, meaning you were a serious seller, you might want to pay attention to when that inventory was going to fall. And I think there's probably been some handsomely rewarded sellers who came to the market in the last couple of weeks as the inventory dropped.
Sold the house.
Their houses were in good neighborhoods. They were well prepared for the sale, so they looked great. And they had a professional, experienced agent helping them navigate through this very difficult market. So kind of a tale of two stories, tale of two cities. You know what I mean.
You're confusing me.
Definitely a good time to consider selling as the inventory came down, but we might be entering a very favorable time to be a buyer as that inventory level is likely to start climbing again. So we're going to look at those numbers, and then when we come back from the break, we're going to talk about the rental market a little bit and what I'm seeing there that might just kind of indicate further softening. Anyhow, inventory drawdown numbers. For the sake of argument, let's just say that the inventory peaked sort of end of June, beginning of July across the 5 regions that I cover. And where have we gone since then? Well, in Durham region, the inventory has fallen by 12%. But year over year, we still have 18% more inventory than we did at the same time last year right now. Halton region has fallen by 20% since the peak, but has 25% more inventory than same time last year. Peel region fell by 13%. Is 27% higher than this time last year. Toronto had a massive drop through the end of the summer, 28% down from the previous period, and 25% more inventory this time this year as opposed to last year. York region had a drop of 14 since the peak this year, and up by 23% compared to the same time last year. So again, inventory's drawn down through the summer, but we still have much more inventory today, which is September the 3rd, than we did September 3rd, 2024. Condo market, very much the same story. It drew down by about 20% from its peak at the end of June and beginning of July, but still has 22% more inventory on the market currently than what we had at the same time last year. How is this affecting the ad-libs numbers and possibly prices? So preliminary information on the ad-libs, which I won't be able to calculate with a firm number for a couple of days yet. And that's incidentally because properties, the sale date of a property is recorded when the buyer and seller enter into the agreement and sign it. It could still be conditional for a few days, which means it won't be posted as a firm sale until sometimes a week or even later. So I wait a little bit of time beyond that to get an accurate number of the sales. I suspect that the ad-libs numbers are probably going to be pretty flat, just based on what I'm seeing as inventory drawdown and then just people sort of cooling off on their interest. But where I think we may see a bit of a change in the next 30 or 60 days is when TREB reports its average sale price and its medium sale price. I wouldn't be surprised if we saw that edge up a little bit compared to the previous month.
That's ridiculous.
And again, I think that's just some FOMO from buyers who were looking for a couple months, saw the inventory drawing down, perhaps properties they looked at had sold and went, let's be honest, sooner or later, human nature is going to take over and you're going to want to do what you planned on doing, which is to become a homeowner and start your life in your new house or condo.
Let's do this thing. Come on.
So that about does it for this segment of the video. Let's get to that inventory story, and when we come back, we'll talk a little bit about the rental market. So what am I seeing in the rental market that's worth mentioning? A bit of a divergence. As you know, I cover two sort of price categories in the 416 rental market. Things below apartments or rental shared accommodation below $2,000 a month, and everything between $2,001 and $2,500. The market between $2,001 and $2,500 a month seems to be shrinking a little bit. It's gone from about 33 down to about 27%. Whereas the availability of units below 2,000 has gone from a low, when I started recording that information, of around 10 or 11%, all the way up to about 17% now. So what I'm seeing is that there's more increased competition for people who are trying to rent out apartments or shared accommodation below 2,000 a month, and I think that could be directly attributed to the decrease in foreign exchange students.
You may be onto something, Robin.
I don't know. What do you think? As far as the other segment of the market between 2001 and 2500, well, it would seem to me that if you're looking at buying your first condo, you're a first-time buyer, you probably feel the market has some further softening. So why not rent for a year or so and see what takes place with that market? And bearing that in mind, you're going to want to save money. You're certainly not going to want to deplete your down payment savings. So what's an affordable rental range? Well, you're probably going to want to be below $2,500 a month. And the fact of the matter is there's still pretty solid availability between $2,000 and $2,500. Condos, one bedrooms, maybe studio type, where someone would hang their hat for a year to see what happens with the market. And let's not forget that a ton of purpose-built rental is being constructed right now in the city of Toronto, and on top of that, there's still a lot of these dog crate condos that are nearing or at completion now, where the owners are going to be taking possession of those units and likely not occupying themselves, but looking for a tenant. So all of this, I think, spells a little bit of insecurity there in the low-end rental market, and there's really no doubt that that likely will spill over into the resale condo market as well, and maybe even a little bit resale housing market.
Really?
Anyway, that was a long one. Hey, listen, thanks again for tuning into the channel. Don't forget to check out the website, RE Inventory TO, where all this data is available for you number nerds, I guess. Again, I think they're helpful metrics to give me an idea of which way the market's going. Anyhow, until the next episode, this is Mike Brown with RE/MAX, uncovering the real state of real estate here in the GTA and Southwestern Ontario.